Hey, good morning. Good morning, good people. Good morning, good people. Good morning. It's been a while. It's been a few days since I was able to go live. Just had to update some equipment here, and so we're just going to get right into it. Let me know if you guys are there. I had to reset this equipment. Let me know if you guys are there. Good morning from around the world. I see. Let me know if you could hear me good as we talk about before the Fed. Let me know if you guys could hear me. All right, I see some thumbs up. Let's do a check-in where you guys are from around the world, where you're from. All right, there we go. Now we're cooking. Hey, can you guys hear me? Can you guys hear me? That's what I need to know so I'm not rambling on like I did before. Yes. Good morning. Hey, good morning. Good morning. We're going to talk about a few things as we go into opening bell. As you guys know, today is the day that the Fed will pause or raise. Okay. Good morning. Hey, good morning. Yes. All right. There we go. Hey, it's good to see you, fam. It's good to be back, family. Hey, if you're new to the page, go ahead and hit the like, subscribe, and notification bell. We are the family. All 500 and whatever subscribers, we are the family. It's not just me, it's we. I love it when I see you guys. Yeah, let's do this. I love it. Hey, we got Puerto Rico in the house. We got Cali in the house. I love it when I see the family answering other people's questions, and you guys are dead on. Okay, Memphis, Tennessee in the house. Hey, good morning, Chris. How you doing? We got North Carolina in the house. All right. Good morning, Latanya, Muhammad. Good morning. Yep. Good morning, Delaware. Mexico, viva Mexico. I spoke in Mexico last year, had a great time out there. South Kakalaki, is that Greenville? I'm sorry. No, it's not Greenville. Here you go. All right, DC up in here. Stock Brother. You guys go check out Stock Brother. Sometimes, Stock Brother, I come by your page and I just listen to you, brother. I like what you're doing. All right, Texas and New York City. All right, let's get into it. You know what? We're not going to do opening bell today. We're just going to talk. We're not going to do opening bell. You guys see what opening bell is. We're just going to talk for a minute. All right. Let's listen. There's something that I want everybody to hear. All right. Good morning. Good morning. We're going to get right into it. Today, I'm going to be live 3 times today. All right. 3 times. I'm live right now, of course. And I will go live for when the Fed does his interest rate hike or not. We're going to talk about that in a minute. And then tonight, I believe that I'll be hosting with Stocks with Josh, Keenan Grace, Stock Mo, the Core 4. We will be chopping up what this market. You don't want to miss that. If I can pull that together, I just want to make sure that everybody could make it. So I will let you know. And of course, the Fed will be talking at 2 p.m. Eastern Standard Time, which is 1 p.m. Midwest. Okay. So I want you guys to hear this about the banking, and I'm going to play this again. I want you guys to hear this, right? Let me see if I can get this to work.
This lesson of borrowing overnight and lending long, whether it was the 1970s,
What does he say?
You shouldn't have borrowed short and lend long. I mean, Finance 101. How many times, how many decades are we going to learn this lesson of borrowing overnight and lending long? Whether it was the 1970s.
See what he is saying, and this guy is very respected. This gentleman's name is Michael. He's an icon, and he knows what he's talking about. He said borrowing short and lending long, and that's how the banks got caught up in the mess that they're in. And he just gave a dire warning that they should have known about this. Scary looking guy. He does look scary. He looks like in a horror movie, the guy that sits at the desk when they drag your body, your lifeless body into a room, and he's the guy you wake up to and you go, ruh-roh. So yeah, that's what's happening with him. Let's check out and see where the markets are Let me pull this up and let's see how we are opening. Not bad, pretty much flat. Let's put the S&P and the NASDAQ in there. We're pretty flat. But you know what? You have companies like Starbucks that had a great report, right? Good earnings, and that are going low and still selling off because of what they see in the future, right? I had a few notes of some things I wanted to talk about. There's so much to talk about, but I will be talking all day today, so we want to see what's going on. Right. Yeah, Starbucks had good earnings, but it's selling off, right? Just like the gentleman said, the banks borrowed short and lent long. That's what's happening. They borrowed short and lent long. And like I've been saying, if you borrow short and you have fixed interest rates and the Fed is continually raising interest rates, then you're going to be in trouble. OK, new job openings are still they're slowing down. Right. So the jobs report is still decent, but it's slowing down. Right. Then we have to look at commercial real estate, which leads into residential real estate. Commercial real estate is in serious trouble of default. Who does most of the commercial real estate? Regional banks, not major banks, regional banks, right? And you see how one affects the other, right? And if the Fed continues to raise interest rates, it's going to hurt the banking, which will hurt small businesses, which will hurt jobs. Okay. And so the question is, will he pause right now? Will he go up 25 basis points? Will he just go up 25 basis points and go neutral from there? I personally believe we'll know in a few hours that he's going to go up 25 basis points. I believe that that's what the sell-off was on yesterday. And then I believe he may talk about a pause after that and then say that if inflation comes back, he will just go back to raising interest rates again. That's what I believe his tonnage will be. So we shall see in a few hours, good people. So those are the not good things. Those are the things that I wanted to talk about this morning. All right. And before I answer some questions here, we're in 7 minutes. I'm going to keep this one short. Before I answer some questions here, I do want you guys to check out the top link below. All right. A lot of people are leaving me comments that they are learning a lot, not just from me, but from Stocks with Josh, with charting, with options classes, Keenan Grace, fundamentals, Stock Curry. We even got dividend investing with Mommy Trader. That is the first link below. OK, we're at that camera. And then let's just get this out of the way. You guys know 15 free stock plus 5 more is 20 free stock with Moo Moo. All right. So get your stocks and get your class. Right. If you've been investing since COVID, then you need to take that class. And it is the cheapest class. And I have held the price for you guys. All right. Hey, good morning. Blessings. CVS dipped down a bit more too. Yep. Watching from Greece. I got to get to Greece. Stockbook price went up $6. A large cup of coffee. Stop it. Yeah. Like the prices of the coffee is not the problem. It's what they see coming for the future. A lot of these companies, good people, are getting ready for another leg down. Most analysts think, including myself, think that, I'm going to stop saying another leg down. A quote unquote recession that will get announced that we're in a recession. OK, official recession. We're already in a rolling recession. But that's what most of the CEOs are getting ready for. That's why you see the cuts in jobs. That's why you see these companies trying to operate leaner ahead of time so they could show you and I that they're doing a good job at running the company lean. OK, and then if they have a credit crunch where they can't get access to capital, don't get it twisted. Even in a recession, even these major companies have problems getting access to capital, especially small businesses. If you're losing these regional and small banks, then big banks lend to big companies first. I showed you guys that in the report. And that's just the way it is, okay? And we've learned a lot about banking in 2008. I was investing in 2008, and we learned how this thing is a house of cards, okay? So we're at 10 minutes. Let me answer a few questions. Hey, good morning. Gloria, my Gloria. Things ain't been the same since you went away. All y'all old schoolers, y'all know about Gloria. Hey, hey, yep, Apple. Yep. So we at BP. BP, how did BP do it? They reported yesterday. Let's see what's happening with BP. Yeah, we're paying more, but you know what's going on. All right, yeah. The oil is slumping again. Look at that. Shell, Chevron, Exxon, just down. Let's look at for the week. For the week down also too. Yep. It's just when these companies are making money, right, and they are getting frothy, top heavy, then that is a problem, good people. That's a problem. All right. Okay. Let's see. Price is too high. Boycott. Make up. Go bankrupt. Index funds or stocks. Well, you know, there's a saying that indexes are better as the market goes up. Now, we're in a bear market, and I agree that we need to be stock picking. And I'm going to tell you guys that if and when we have another major leg down, I'm going to challenge you guys to have a list of companies that you want to purchase. The average bottom, no one knows where in the bottom is, but the average bottom, believe it or not, doesn't last 11 weeks. It only lasts about 11 days. And that's where the bottom is, okay? And so was October the bottom? Could be. A lot of us think that it will, at minimum, retest the bottom, if not go lower than the bottom. And so I would say being a good stock picker is what's good right now. As you guys know, with me, just holding cash, I'm fine. I'm fine if October was the bottom, so be it. I'm still DCAing. And that's one of the things that I'm also going to challenge you guys. If you see a good company with good earnings, good PE, good, you know, just a good management team, always look at the managing team. You know, everything looks good. The financials look good. And you see future growth, especially if they have AI or artificial intelligence, then just dollar cost average. Continue and never stop. Now, big tech is overpriced right now. I believe it. They're all overpriced. I believe all big tech will cool off. And you say, yeah, Larry, you're DCAing in big tech. Yeah, I was DCAing when it was low. I'm going to DCA when it's high. I'm never going to stop DCAing in big tech. But in it, when and if big tech goes lower, then I'm going to buy big chunks, right? And then when it comes back up, that's when I cool off and just continue my DCA. That is for those of you that are building generational wealth, long-term generational wealth, right? Hey, Francisco. I think about Elf. Francisco. I don't know why, man. I get these kooky thoughts. Hey, I appreciate your super chat, Francisco Sanchez, fan. What did you say? Fan character wearing heart-shaped sunglasses. I appreciate you. Hey, happy blessed Wednesday. You better sing. Y'all don't know nothing about Gloria. Y'all new schoolers, y'all better check Gloria out. That's a jam. Can you give us a take on Square Block? You know what? I haven't looked at it recently, but I will. I believe that's in one of my. I believe I'm DCing in score. No, I wasn't. I was waiting on that, but it was in my financials actually. That's where I had it. All right, but I'll take a look at it and share it with you guys. California, good morning from Australia. All right. Hey, good morning. Okay, can we talk about TMF, SQQ, and all of that? So listen, I'm going to tell you about SQQ. I know there's a lot of people that play the Qs. You guys saw some months ago, we made a killing on the Qs, and we were doing options on the Qs, SQQs and TQQs. TQQs if you think the market is going up, SQQ if you think it's going down. Just think T as in tall going up, S as in short going down. That's just a way to remember it, right? But let me share with you guys about these Qs. These are not investments. These are swing trades. If you see the market moving in a direction, if you think the market is going up, that's when me, personally, I play the T when I think it's going up. And I play the S when I think it's going down. But I'm in and out in a matter of days. I don't do weeks and months. I know other people do play these long. I personally don't. I personally think that these are swing trades and not investments. So be careful, because at some point, theta will come and eat away your gains. Okay? Don't be greedy. When they go up, take profits, right? Okay, so Block reporting today. Thanks for that. Block is reporting today. I got to take a look at it. Listen, the big thing is the Fed meeting, so I may not be able to help you before what's going on. And the VIX too. The VIX too is a swing trade. It is not an investment. It is a swing trade. Okay. There are inflection points on the VIX when it's a buy, and then there's inflection points when there's a sell on the VIX. Listen, Stocks with Josh and myself will be going live, and we're going to talk about the Qs and the VIX and all of that, and just discuss how to really look at that. That's one of the things I'm going to do. We may wake up Technical Tuesdays and further help you guys in that area. So not only can you make money now, but you'll be able to make money from here on out. That's why I suggest people take the class, because listen, in one play, you can make what the entire class costs, right? And just learn, good people. Just learn from anywhere. Look at the free stuff. Take the class if you want to make more money. But there's other stuff out there too. Just learn, good people. Just learn from anywhere you can. Because if you stop trading for a minute, right? Because when you trade, you're putting your money at risk. If you just take your money and invest in something, even if you don't get my class, learn from something. Because the price that you pay for an education, remember, always invest in yourself first. Then you'll make that much more money, right? And then instead of 70% losses, you can go from 70% losses to 70% wins, right? And so I expect the people that take my class to make way more money than they used to make, especially if you got in after COVID and you really got in and started investing, and you're figuring it out while you're investing. Just stop, get a basic understanding of how things work. We got TA with Josh. He shows you in the class where to buy and where to sell. If you learn all of these tools, then you just come in with the family, man. You just looking for, what's next, how you can make money. But it also shows you how to protect your gains and what not to get into, okay? All right, good people, make sure you join me live for the Fed Talking, okay? I love each and every one of you guys. I hope you have a blessed and wonderful day. Look, I keep it real. I ran down here and I was looking for my the bottoms to this. This is a 3-piece suit, and I got on mishmash. I got on mishmash. I'm glad I got this desk, y'all. I keep it real. I'm glad I got this desk to hide under, right? I ain't got no shoes on. I just want to come down here and kick it with y'all. I love you guys. Hey man, we family, right? We're supposed to be able to share all of this stuff. Hey, make sure that you, like I just said, make sure you check out the class and then make sure you get your 20 free stock. I love you guys. I see you later today as the Fed raises by 25 basis points. Maybe.